Let's keep responding to comments. So ZR2EE1, not sure if I'm pronouncing that correctly, says another critical point would be the taxes and insurance are no longer in escrow, so 11 months out of the year, they are working to drive down the principal balance as well. Also, there is no PMI. Thank you for the comment. You're 100% correct. Thank you for pointing that out. This was on my first Lien HELOC explainer video. He's adding some more nuance, some of the additional benefits to the first Lien HELOC that wasn't covered in the video. So, correct, you no longer have escrow. You're not paying taxes and insurance in advance. Your typical mortgage has an escrow, which means you pay taxes and insurance 12 months in advance. So you're always doing that. Whereas with this, you're paying them when they're due. So you're no longer paying them in advance. So that money that would have left your personal economy today instead leaves your personal economy 12 months later, which of course benefits you because it knocks down your principal balance further for those 12 months. And there's no PMI. Yep. Depending on the mortgage, there could be PMI. So that is another important point. So you do not have escrow. So not only does it reduce your overall interest costs, delay by 12 months when you're making the required payment, that also just gives you more flexibility. Thanks for pointing that out. I appreciate it. Chad Shirley, 3690, says, would be cool to have a discussion with Todd Langham. I think he meant to say Langford, truth concepts about this. Thanks for the comment, Chad. This was on one of my videos on combining velocity banking with infinite banking. Yeah, it would be good to have a conversation with Todd Langford. He did have a discussion with Denzel Rodriguez on Caleb's show about the merits or demerits of velocity banking. And I will probably do a response video to that at some point. Todd is very much a numbers guy. His software is Truth Concepts, and it allows you to illustrate and quantify various different scenarios, mostly with whole life insurance, but others as well. So he's very much numbers driven. So then we responded and says, yes, definitely would be great to have Todd Langford on the show. He had a discussion with Denzel Rodriguez on Velocity Banking on Caleb's show. Then Chad Shirley responds and says, nice you saw that. Todd totally changed my perspective. Thanks for commenting back. I said, thanks for engaging. How did Todd change your perspective? Are you practicing IBC currently? He says, per Todd, that you can't use grade school math when looking at opportunity costs and the time value of money. You need more advanced calculations. I was mistaken in many of my beliefs and practices of velocity banking and HELOCs until Todd ran the more advanced math. Per IBC, been studying it for a bit. Thanks for your comment, Chad. Glad to hear you're studying infinite banking and velocity banking. It's never too early for us to have a conversation. I would recommend scheduling time with someone. Continue your education process, of course. You don't have to be ready to take any action today. But one of the things I always recommend is schedule time with me or some other expert as soon as possible because we can at least help you to avoid mistakes. Oftentimes, people wait until they feel like they've completed or gotten far enough in their education and started to get more comfortable with the concepts. And then by the time they talk with me, they've made mistakes without knowing it, or maybe something has happened to their health. You can't just do infinite banking anytime you want. Health comes into it, finances come into it. Plus, with me, there are other ways I can help you. There's going to be no sales pitch when you come and talk to me. I just try to help people any way that I can. I can help you find a job. I've helped people find jobs. I've helped people grow their businesses. I can help you save money on health insurance. I can help you save money on home and auto insurance. Lots of other things we could potentially do. But most importantly, I can help you avoid mistakes between now and when you do start infinite banking, if you ever do. And we can lock in your insurability with a convertible term policy. So if anything happens to your health, you'll still be able to do infinite banking. Or even if nothing happens to your health, you'll just have the convenience of not having to go through underwriting and just doing a term conversion when you set up your whole life policy. That's really important. You don't have to shortchange your educational process at all. You don't have to sign up before you're ready, but it's never too early to have a conversation. You'd be surprised how often people make mistakes unknowingly while they're going through their process before they schedule time with me. And it's always frustrating because if I had spoken to you 6 months, 12 months, 18 months ago, we could have done this a lot better. Not without doing it earlier, just by avoiding mistakes. But thank you for the comments. And when I saw the discussion between Todd Langford and Denzel Rodriguez, it was one of those things where I agreed with both of them. I really didn't disagree with either of them. There wasn't a lot of necessarily debate or contention between them. I think all the points that Todd made were valid. One of the things I liked is that all of the points that Todd made were not numeric. You can illustrate them numerically, but he's pointing out things like the time value of money, which I 100% agree with you. That's a really important one. Some people who promote velocity banking treat mortgages like they're just horrible and they charge you all this interest. Mortgages are not horrible, actually. I don't think they're terrible. I think they're one of the least toxic forms of debt out there. I do think many people don't really understand how mortgages work, and we can educate them on that. But I'm not against mortgages. And velocity banking and the first lien HELOC don't apply in every situation. I think that's one of the caricatures people will place on us where they think we're saying everyone should be doing velocity banking all the time. A mortgage is terrible and you should always do a first lien HELOC instead. No, it's not true at all. I tell a lot of people not to do a first lien HELOC. I tell a lot of people not to do velocity banking, especially if you want to do infinite banking. I personally am always going to prioritize infinite banking over velocity banking. And you can do both, but not always. And it does change the equation a bit. So I think velocity banking is ideal for people who either they have toxic debt they want to get out of, or getting out of debt is just a super high priority for them. They just want to get out of debt and they want to pay off their house. For many people, paying off their house is not necessarily a goal of theirs, and they're not eager to get out of debt. If you don't have any toxic debt, I don't think you need to be eager to get out of debt. We can look at it and see what makes sense. The other category of people for whom velocity banking with a first lien HELOC may make sense are more sophisticated investors, especially real estate investors, where they can keep recycling capital through their home equity and use that home equity strategically. So it provides them with a great strategic pool of liquidity that they can have available anytime that they want to make real estate investments. Because one of the biggest challenges real estate investors face is getting the financing. Banks can be very difficult to work with and they have their own arbitrary rules that real estate investors come up against. So having a HELOC on your primary residence, especially a first lien HELOC, where now you can come with cash to purchase a deal, can be a great way to purchase real estate. Outside of those categories, we'd have to look at it more closely to see if it makes sense for you. I would also make a distinction between arithmetic and mathematics. Todd keeps using the word math, but he's using that word incorrectly because anytime we're talking about numbers, we're not talking about math. Mathematics is conceptual. I majored in mathematics in college, and we were never talking about numbers. Once you get past multivariable calculus, it's all proofs. There are no numbers, there are only elements. I would ask Todd, hey, Todd, what is a number? You use these numbers all the time. What is a number? I guarantee you, Todd could not answer that question. He's very good with arithmetic, but he doesn't know mathematics. Most people who claim to know mathematics, really, they know arithmetic. They do not know mathematics. And I'm not saying anything Todd is saying is wrong. Everything Todd is saying is true and valid from what I can see. But he's a numbers guy. He's not a math guy. Those are two different things. The other thing I would ask him is, Todd, what is money? Because most people don't know what money is. Todd is the same way. He does not understand what money is. He does not understand the difference between money and currency. Two different things. Two different things. Now, again, that doesn't invalidate any of the things he's saying. I'm not disagreeing with him. I'm just pointing out that Todd is limited. He's a numbers guy, and he's great with the numbers. And he's great at applying correctives because I agree. He introduces the time value of money, which is very important. because some people with velocity banking, they make the mortgage seem like it's a payday loan where they're like, you're paying 100% interest, 150% interest. It's ridiculous. Yes, you're paying 100% interest over 30 years. That's very different in paying 100% interest in 1 year. So just because you're paying 100% interest doesn't make it a horrible loan where you're getting taken advantage of. It's 100% interest by volume, but that's over 30 years. That's not all in 1 year. If someone charges you a 100% interest rate, where they're charging you 100% interest in 1 year, yeah, that's an exorbitant rate for sure. But if you're paying 100% interest over 30 years, that's a completely different situation. So I agree, Todd, introducing the time value money is very important. And understanding the time value of money is one of those subtle concepts that'll really change the way you think about things and operate. As an example, for me, starting to intuitively understand the time value of money, especially having the experience of having a mortgage, made me more comfortable carrying more debt when I realized it was actually better to keep the liquidity and not pay off the debt sooner. Assuming we're talking about non toxic debt. I'm not talking about credit cards that are charging you double digit interest rates. I'm talking about things like a car loan, a student loan, or a mortgage where you're being charged a very low interest rate. But yes, thank you for your comment. Perhaps we can have a conversation with Todd at some point. Piff Home Biz 9961 says, thank you for this valuable education. They're commenting on my first lien HELOC velocity banking answer objections part 2 of the series. Thanks for the positive feedback. I appreciate it. Jane Marie 5450 says, very concise and succinct video. Thank you. Thank you for the comment. This is on my What is the Infinite Banking Concept? Part 1 of 2. I tried to do my best to put together a clear visual explanation of what the infinite banking concept is. Quite frankly, it doesn't exist. We in the infinite banking space, including Nelson Nash and all of the practitioners I've ever seen, do not do a good job of explaining the concept. Let's just be honest about this. Because of my health issues, I'm not able to engage at the level of mental capacity I normally would be. And I would like to put together a nice, clear visual explanation of the infinite banking concept. I have not, but I think what I've done is better than a lot of what's out there. That's damning by faint praise. But the consistent feedback I get from prospects and clients is that I do a better job of explaining it than anybody else in the space, which I appreciate the compliment. I think it's damning by faint praise, but that is something we in the infinite banking footprint just need to be honest about. We just need to be honest about this. I saw one infinite banking practitioner expressing on his YouTube channel frustration that people kept asking for visual explanations and things like that. Don't get frustrated at people who ask for something that is pretty obvious. That's what anyone would ask for, especially when you're talking about something that is conceptual, that is abstract, that is subtle, that is not so easy to understand. Visuals, provided they're good visuals, can be very helpful. A clear visual that actually explains it. I'm not talking about just marketing. I'm not talking about most of the visuals I see in the infinite banking footprint, which are terrible and don't explain it very well. So we need to do a better job of this. Let's just be honest about it. Let's not behave like 3-year-olds and point the finger at other people. Yes, those other people have their issues for sure, but let's focus on what we can control, which is our own behavior. So let's try to come up with a better way of explaining it, a better way of visually explaining it in a clear, concise manner. And we don't have it. We don't have it today. And that hurts us. That really hurts us. So let's do a better job of that. But thank you for your comment. I appreciate it. Cat K78 asks, so which do you do first? The first position HELOC or IBC whole life? Do you support the whole life with first lien or whole life with money from first lien? Thank you for your comment. And this is a great, great question that I get a lot. So we're talking about velocity banking with a first lien HELOC, and we're talking about infinite banking using whole life insurance policies. Which do you do first? What's more important? Let me first say there's no right or wrong answer to that question. A lot of it depends on you and your psychology. We can run the numbers and see what makes sense numerically, but that's not the same as what makes sense for you psychologically. That's more important. But me personally, I would always prioritize infinite banking over velocity banking. Of course, you can do both at the same time. So it's not an either or scenario. I have clients who do both. So you can do both. It's not either or. If for some reason your cash flow is such that you can only do one or the other, meaning that to make the first lien HELOC work, we have to apply all your liquid savings and all your free cash flow to it, and we cannot spare any for a whole life policy, then it's an either or scenario. And in that case, again, it depends on you. This always depends on you. If you have toxic debts you want to get out of, if you just really want to pay off your house faster and you want to be debt free and that's going to give you more peace of mind, then you should go ahead and do that. But I would always prioritize infinite banking first. So in that case, I would keep your mortgage. I would not do a first lien HELOC. I might do a second position HELOC if I have space for a second position HELOC, but I wouldn't use it to start making chunk payments on my mortgage. I would just have it there to make that equity available to me. Then I'm going to take out my whole life policy and start building capital there. And at some point in the future, if I want to take out a policy loan from my whole life policy and pay down the mortgage, I can. If I want to start making chunk payments for my second position HELOC, I can. But me personally, I'm going to use as much of my available cash flow as I can and as much of my liquid savings as I reasonably can to build capital and whole life insurance first. Me personally, I'm not going to pay off my home equity debt any faster than I have to. So it's not an either or scenario, but what I would always recommend is take out a convertible term policy. So, regardless of what we decide to do eventually, we're going to take out a convertible term policy today. So, we locked in your insurability. We've guaranteed your ability to do whole life insurance at some point in the future, no matter what happens to your health or your finances. And then we can decide. Maybe we decide to do velocity banking until we pay off all your debts or until we pay it down to a point that you're comfortable. And then we do a conversion of the term policy to whole life insurance. Maybe we do the term conversion first and we start building capital and whole life insurance. And then maybe later we can apply velocity banking. It's really up to you. There's no right or wrong answer. You can do both at the same time. It's not an either or scenario. But if I have to choose one or the other, I'm always going to choose infinite banking over velocity banking. And I'm always going to prioritize infinite banking over velocity banking in general. One exception might be if you have toxic debt. If you have toxic debt on credit cards that's charging you double digit interest, I would still take out the convertible term life insurance policy because you still need that death benefit protecting you. But I would probably use velocity banking or whatever method I'm able to use to at least pay off the toxic debt first. Once we paid off the toxic debt, then we can look at potentially doing infinite banking. But assuming you have no toxic debt, the numbers will always tell you that the compound interest you're going to earn in a whole life insurance policy over the long run is going to dwarf the interest costs you're going to save by paying off your house faster, paying off your debts faster. In my video on the cost of waiting, I showed that if you wait even 1 year to take out your whole life insurance policy, the cost to you is 6 figures of retirement income. Because it's not just the cash value that you build up in whole life insurance, it's all the things that you can do with it because you can get so much income out of your whole life insurance policy because it's a two-dimensional asset. You can borrow against it without interrupting the growth in the policy. So having $500,000 in cash is a lot less than having $500,000 in cash value in a seasoned whole life insurance policy because there's so much more that's going to do for you. I don't measure the cost of waiting in terms of just how much cash value would you have, but in terms of how much retirement income can you draw from it, as an example. And even that doesn't really encapsulate all the benefits you're giving up by delaying your whole life insurance policy. But it's a great question to which there is no one right or wrong answer. It really depends on you, your specific situation, and your psychology. But thank you for the comment. I really appreciate it. I just want to mention there's a guy, Sniper Recon 676. He made one of the best comments I've ever gotten on my channel. It was terrific. He responded here, and I believe he either is a doctor or a medical professional of some kind or was. And unfortunately, I was unable to publish the comment because of some of the language that was used, but I would appreciate it, Mr. Sniper Recon, if you would keep commenting because it was a great comment. And I did not disagree with him at all. He was basically responding to my medical cartel comments and giving the doctor's side of it. And it was very interesting perspective. One of the things that he pointed out that is 100% correct is that there is an artificially created shortage of doctors and medical professionals. So, why is it that you only get 7.5 minutes with the doctor? In part, it's because there's a shortage of doctors, right? It's very difficult to schedule time with a doctor, especially if it's a specialist. You might have to wait months because there's a shortage of doctors, which is artificially created through various means. Doesn't have to be that way. And so the doctor is under pressure to see more patients because there are patients waiting months to see him. I certainly understand all of that. So I thought it was a great comment. I agreed with it. And I wish you would repost that sort of comment without the bad language because it was very insightful and correct. And I don't disagree with you at all. It's just giving a different perspective. There's the patient's perspective and there's the doctor's perspective. And the other thing he's pointing out is that the doctor is really beholden to the medical cartel as well. Really, the people who are calling the shots are much higher up than the doctors. The doctors, if they're members of the medical cartel, they're pretty low level members. They're paid pretty well, but relative to the people at the top, they ain't got much money and power. They're pretty much doing what they're told. They're just overpaid bureaucrats, like I've said before. But I'm not going to make excuses for doctors either. They may be under pressure, but I'm not going to make excuses for them. If you can only see your patient for 7.5 minutes, you can still treat that patient with respect and not be condescending and self righteous. You can still be professional. And unfortunately, in my experience, doctors are simply not professional. There's no incentive for them to be professional, and there's no feedback mechanism to them or accountability when they are unprofessional to their patients, as they are 90% of the time. So, yeah, if you're earning $500,000, I don't want to hear your whining. And I'm not going to make excuses for people who do not respect or treat other people with charity, regardless of the situation. Yes, the doctors are under pressure, but you can still treat other people with respect. I'm not going to make excuses for people who make high six figures and can't treat other people with respect. But thanks for your comment. I appreciate it. Mr. Gavel 2856 says, great presentation and explanation. Thank you very much. I appreciate it. This is on the all-in-one loan interview with Andy Brown. The all-in-one loan is another form of first lien HELOC. Bia Optional comments and says, Mr. DeAndre, thank you for sharing. I'm a senior citizen seeking financial freedom and have been for most of my life. After tuning in on one of your episodes with Mr. Jamel Gibbs, the best life insurance policy, I've been terribly disappointed with myself every time I look back over my life, because if I had listened in my earlier years, things could have been a lot different to share with my family members slash grandchild. I don't know if it's possible for me to receive a response from you or your company to maybe connect with someone professional like you that I can trust with good advice. Thanks for your comment. In terms of connecting with DeAndre, his links are publicly available, so you can just go through to his site and schedule time with him directly if you want. I would say it's never too late to do the right thing. There's always something we can do in terms of optimizing whatever you have. All of us have made financial mistakes, no matter where you are in life. There's always something we can do to improve it, optimize it. Doesn't hurt to have a conversation. Thanks for your comment. I appreciate it. Thanks for your honesty. And I do think there's something you can do for your grandchild. Appreciate the comment. And Bea Optional comments again. This is on another interview with DeAndre Clayton on Psychology of Money. Dear Mr. DeAndre Clayton, how are you? Well, for your information, I'm a senior citizen who has been seeking financial freedom most of my life. I'm very disappointed in myself when I look back over my life. I can see now where I could have looked into your industry harder and could have established more of a stable financial freedom that would already be in place to help family slash grandchild now. Is it possible for me to receive a response from you at your earliest convenience regarding me getting on the right path to a life insurance policy? Thanks for your comment and thanks for your humility. This is a refreshing change from what we oftentimes see where people want to posture and pretend like they know everything and pretend like they're doing so well financially when really they're not. So your honesty and humility is greatly appreciated. That sort of attitude will serve you well when you meet with a professional like DeAndre so that he can help you better. But yes, you can certainly schedule time with him. All of his links are publicly available. If you do meet with him or talk with him, let us know how it goes. DeAndre, obviously, one of the professionals in the space who can really help you. Thank you for your comment. Green Eggs Lamb 9336 says, "Hello, is this available in Texas? And do I use my mortgage payment when calculating my debt to income ratio? Thank you." This is a question comment on my first lien HELOC explainer video. Thank you for your comment. Yep, there is a first lien HELOC product available in Texas. It's a little bit different. The laws in Texas with regard to home equity are a little bit different, a little bit more restrictive. So, yes, it can be done, but some of the automation is not quite there as much for various reasons. But yep, it can be done in Texas. And do you use your mortgage payment when calculating my debt to income ratio? I believe the answer to that is yes. So I don't consider myself a velocity banking expert. I'm more of an infinite banking expert. I don't get super deep into those kinds of questions. So really that's a question for the lender when we speak with the mortgage loan officer after you schedule time with me. But yes, it is available in Texas. And yes, I do believe you use your mortgage payment when calculating your debt to income ratio. And then he says, "Thank you so much." No problem. Of course. Green Eggs Lamb 9336 comments and says, "Thank you. No problem. You're welcome. This is on my video on earn 12% on your cash in a bank account." And yes, you can earn 12% on your cash in a bank account. It's not a scam. There's no risk involved. You're not taking on any more risk than you're accustomed to taking on in a bank account. It can be done. The only catch is it does require a little bit of work. Not a lot, but it does require a little bit of work. You might have to, as an example, sign up for a new bank account. You might have to do something like that. So if you want to learn how to earn 12% on your cash in a bank account safely, watch that video. It's interesting because when you tell people, if you were to ask them, would you like to earn 12% safely on your cash? I think everyone would say, sure, yeah, I'd love to do that. If I can do that, why would I put my money in the market when I can just earn 12% safely on my cash? I say, great. But then when I explain to them how it works, their eyes glaze over because they're not able to do even a small amount of work. So what you're really telling me is you actually do not want to earn 12% cash. You'll take it if someone just hands you a check for that amount today. But if it requires any work at all, like signing up for a new bank account, then they're just not willing to do it. So what they're really saying is they actually don't want to earn 12% on their cash. Well, I do, and I'm willing to do the work to do it. But if you want to see how it works, click on that video. Thanks for commenting. ZR2EE1 says, "Me and my wife came out to the Mayo Clinic in Florida. So far, they have been quite responsive and willing to help where they can within our limited time frame. There is a lot of private industry in the area supporting the medical field as well. We weren't able to set up a primary with them since we live in Maine, but it's interesting to see the differences. Hope everything goes well with your journey and you're able to get some answers." Thanks for your comment. I appreciate it. Keep us posted on what's happening with you guys. I hope the same for you. I hope you're able to get your issues resolved. I've been to the Mayo Clinic. I may do another recap of the Mayo Clinic. There was no major breakthrough. So the Mayo Clinic was definitely better than your average healthcare facility, but they're still in the conventional system. They still operate within a lot of the limitations that your standard conventional doctors do. But thank you for your comment. I appreciate it. Best of luck to you. Let us know how things go with you. Fatima Foster 6551 says, "Best wishes on your appointment. I don't know if the following is helpful or not. There is a scan called Prenuvo that lets you know what's happening in the body. It costs a lot, so I haven't done it, but I think about it for the future. I believe FSA may cover it, so perhaps the health sharing you have mentioned covers it too." Thanks for the comment, Fatima. I appreciate it. Thanks everyone for your comments. We'll talk soon. Bye bye.